Hey, Bulls and Bears, we are back with another dose of economic reality. It is Wednesday, March 22nd, 2023. Today is Fed Day. Obviously, I'm putting this out before the Fed meeting. I fully expect a 0.25% rate hike today. I would think it would send a lot of alarm or sound of a lot of alarm bells if the Fed did not at least raise the rate by a little bit, by 0.25%. If the Fed didn't, I think that would send more alarm bells because people would be concerned that the Fed knows that something is getting out of control. Now, are things getting out of control? I think so. I think there's so much stress out there now with all these small banks and regional banks and credit unions that the Fed's not going to be able to keep this whole system of credit flowing. And as we talked about in our previous report, small banks account for a very big portion of the economic activity, the borrowing, the lending, and therefore the spending, which keeps the economy going. And with everything happening right now, with so many people taking their money out of the small banks and the regional banks, credit could really tighten up. So this is going to be a very, very fine line for the Fed to walk. So now think about this. They're dealing with this inflation battle, which they're not winning, by the way. We're still seeing 6% inflation. So that's going to be very difficult to pull off with the banking crisis on top of this inflation fight. When you see a lending crisis, typically as a central bank, you want to cut rates, but they've vowed to be tough on inflation. So they're in a very, very tough spot. So things are really starting, to get interesting in this economic collapse / financial crisis that all of us here that have been on this channel knew this was coming. So now the time is here. It is happening right before our eyes. So it's going to be an interesting time, to say the least. But let's talk about what Jpmorgan said. They said that lending is likely going to be cut off. And I'll let you know the words that they said. That's not the exact quote. Easy credit is disappearing. They're warning of a looming market meltdown. This is a strategist out of Jpmorgan. So we're going to get into that next. Quick, a word from our sponsor. Noble Gold Investments have made it their mission to stay on top of the most important news. 3 bank runs in less than a week. These are the second largest and the third largest runs in history. The government is taking steps to guarantee all deposits. That means more money printing. Plus, the Fed is sitting on $1.2 trillion in losses on their $8.3 trillion bond portfolio. And the Fed will continue to raise interest rates even if they tank the economy. Do you know who are the only ones that are not afraid? The ones who are invested in gold with Noble Gold Investment. Gold is the most stable asset outside of any government control. Thousands have approached Noble Gold Investments to get their hands on gold. Hurry and go to bullboomgold.com to secure your wealth now and get a free 5-ounce America the Beautiful coin with each gold or silver IRA if you qualify. Go to bullboomgold.com, bullboomgold.com. You can also see the link in the description of this video and down in the comment. Both Fortune and Market Watch reported on this today. Already past the point of no return, Jpmorgan says the U.S. is probably headed for a recession as economic engines are about to be turned off. Economic engines about to be turned off. So here's someone else that thinks that the Fed's not going to be able to contain all this small and medium and regional bank contagion, basically. The dream is over. Jpmorgan strategist warns of looming market meltdown as easy credit disappears. Now take a listen to some of the language that was used here. The banking crisis of the past several weeks have indeed increased nervousness. Bank of America's March survey of global fund managers revealed that systemic credit event is now the biggest threat to the markets. Just last month, just in February, the biggest threat was inflation. Now it's a systemic credit event, which means a freeze up of credit and lending. So that's going to be deflationary. That's going to be falling prices. Also, here's what was said in this article. He went on to say the Federal Reserve is past the point of no return. A soft landing looks unlikely. With the airplane in a tailspin, in parentheses, lack of confidence, and engines about to turn off, in parentheses, bank lending. folks, if we see this credit crisis and this contagion expand, we're going to see a deflationary event like we've never seen. So what do you think? Please let me know down in the comments. Will they be able to contain this, their battle with inflation, with the interest rate decisions, on top of this banking systemic collapse that's happening, and a lot of lost confidence, a lot of people pulling their money out of these banks? Are these banks going to continue to loan money? Can the confidence be instilled in these banks to keep on giving out loans? There's no talks of a guaranteed backstop. Even our last report, we talked about how Janet Yellen said, well, there could be, the depositors could be rescued at these banks. If these banks think they're going to run out of money, if people are pulling money out of the banks, they're going to have to really cut back or completely shut off their lending. Now, I've already seen a few reports here online of people getting their notices already in the mail, credit lines being slashed, credit cards being shut down completely for lack of use, for inactivity. So could these things be signs that we're headed for a major credit event, as pointed out here by the Jpmorgan strategist? Now, on the flip side of this, if they are able to keep credit flowing, to keep all these banks operational and propped up, lending money, and not having lending standards tighten, then we could see a inflationary event like we've never seen before, right? So I'm at the crossroads. I don't know exactly which way it's going to go. I don't have a crystal ball here. What I've always tried to do is be prepared for both scenarios. If you want to be prepared for inflation, you need to be invested in something. And my favorite thing right now is silver. And with the silver IRAs that are available now, you have gold and silver IRAs with our sponsor that we talked about at the beginning of the video. Link down in the description for this. Think about that. I mean, I'm not giving anyone investment advice. I'm just saying, if we see this massive inflation, if they are able to contain the crisis and keep credit flowing, a inflationary skyrocket is possible. I hope that's not what's going to happen. So be prepared for both scenarios, right? I watch other people out there talking about there's going to be deflation. A lot of them have been talking about it for years, and we really haven't seen much deflation at all because of all the money creation, all the money being just digitized and put out there, all the rescues, all the bailouts. Think about what would have happened if they wouldn't have came in to SVB and made all of those businesses whole, right? Businesses in there with hundreds of millions of dollars. You would have seen a collapse like you've never seen. It wouldn't have just been a slow motion collapse like we're seeing now. It would have been a sudden collapse. You would have seen so many layoffs, millions of layoffs, probably within a week or so, because those companies would have taken such a deep financial hit. They would have been forced into very serious cost cutting methods, right? So, right, they're keeping this debt mechanism running for now. Will they be able to keep it oiled up, to keep it operational, to keep everything from collapsing and freezing up? Well, it's going to be fun watching it and interesting to find out. As far as the central bank coming to the rescue, I've got a chart right here. I'm going to put it up right now, and you're going to see, this is a 1-year chart, the big spike, right? This is the Fed balance sheet. It was declining and dropping, and all of a sudden to the far right, we saw the big spike up there with all of the bank rescues, the depositor rescues that happened. They've got a new lending facility now that they're funneling to the banks. So if this succeeds, again, we're going to see massive inflation. You're going to want to be hedged against it. You're going to want to be invested to take advantage of this, right? So let's keep our eye on it, folks. We're going to wrap this one up here. Keep stacking. Let me know what you think down in the comments about the rate decision, about the battle for the fight against inflation, plus the contagion of all these banks. How's this going to end up? Please let me know down in the comments. Otherwise, keep stacking. Big love, people. Bye for now. Peace.